Okay, let's get started. So welcome everyone. This is session number 4 in our Strata Basics pilot program that we're running. This session is on notice packages. And one of the forms that I'd like to draw your attention to, which is on our website, is guide number 400-016. And it's a checklist for sending out notice packages and for an AGM. And it's just an easy, helpful way of verifying whether you've actually managed to prepare your notice package correctly, you have all of your content, and any of the materials that you'll need at your meetings. So I'm just going to launch right in. My name is Tony Gioventu, Executive Director of CHOA. And again, here we are. Thanks again to our sponsor. This week, our sponsor is Condo Bridge. They're a strata management company, and you can check them out on their website. Thank you very much for their support of our program. These are pilot projects. We're developing an 8-course program called the Strata Basics that will be open to all new Strata Council members, existing Strata Council members, property managers, owners, just to inform people that they're ensuring that they're getting the correct basic information in place. These sessions are not about legal advice. What they're about is basic compliance with the Strata Property Act and understanding how it interacts with your strata corporation and with your bylaws. If you have an issue that relates to bylaw enforcement or an issue that relates to an interpretation of the Act, we may have to refer you to legal services as well. But feel free to reach out to any one of our advisors who'd be happy to help you and respond back. So we're going to talk about the meeting notice. Minutes we've covered, but the meeting notice itself. So again, we have 5 basic meetings that we convene by a strata corporation under the Act and the bylaws. We have the annual general meeting, which is under Section 40 of the Act. We have a waiver of an annual general meeting, which is under Section 41 and 44 of the Act. And the waiver of a general meeting is a tool that's often used by small strata corporations of 5 units or less, where everybody wants to dispense a lot of the formalities, but you still need to have an annual meeting and everyone can consent to waiving the meeting itself. The notice period is not required when everybody agrees. We have a special general meeting under sections 42 and 45 of the Act. So one's called by the strata, the other one may be a petitioned meeting. And then of course we have special general meetings for purposes like special levies and those items. And we have council meetings, which are fairly straightforward and an information meeting. Not all of these require notice, but it's important to highlight the impact of them. One of the important features I think we forget about with meetings for strata corporations is that whether you're the council, the property manager, or an agent acting for the corporation in some way, you always have to ask yourself, where did I get the authority to make this decision? And the root of all of this comes out of our general meetings. Our general meetings approve budgets and finances, and we ratify rules and often bylaws and other changes to property. These resolutions and the proper notice that delivers them to the owners for a decision are the critical starting point. And if you can get these basics right, you can avoid a lot of problems. Resolutions are important. They provide strata councils, property managers, think of all these people, lawyers, consultants, contractors, lenders, and governing authorities like municipal governments with the assurance that your strata corporation really has the authority to implement a direction of the owners. So here's an example of this that we see occasionally with some municipalities. And excuse me, some municipalities don't apply this. But where there is a major repair, the municipality, or a major alteration, the municipality may request a copy of the resolution approved by the owners authorizing this. They don't necessarily take anybody's word for it all the time. It's not always consistent, not always required, but you will find that this does occur from time to time. So the annual general meeting, let's start there. It has to be held no later than 2 months after the fiscal year end. It can be held before the fiscal year end, but no later than 2 months after the fiscal year end. It must include the approval of the annual budget, and it must include the election of council. You have to include your financial reports for all accounts, not just your contingency and your operating, but if you have 3 or 4 special levy accounts that have never been closed, you're still required to provide a financial report for those accounts as well. It requires a report on Strata Insurance, which is the summary document that shows all of your coverages, deductibles, etc. You have the election of council, and you must include any petition items that were submitted under Section 46. So a question that often comes up is, can an owner demand that the following agenda item be put on the AGM? Well, they can request it of council, and council, who are the ones that determine what the agenda items are, they can agree to put this onto the agenda. However, the difficulty with that is it then becomes a very personal perspective, not necessarily one collective of the corporation. There's no obligation to add those items to the agenda. But if 20% of the owners sign a petition for a specific agenda item, it must be added to the agenda. Special general meetings, they can be called by the Strata Corporation for a very specific purpose. Council, by majority vote, calls special general meetings. However, if a petition is issued for a special general meeting to deal with a resolution that's been raised, within 4 weeks after the demand is received, the meeting must be held. In this case, it's an exception. The president of council may call or give notice of the meeting. They don't have to convene a meeting. However, any of the items that are on the agenda from the petition must be the first items that are added. Doesn't give the president of council authority also to add agenda items. Those would be decisions of council if they were going to add agenda items. And I'm going to explain, I'm going to reaffirm this several times, but if you have any 3/4, 80%, or unanimous vote resolutions, you absolutely must include the exact wording of those resolutions. A waiver of a general meeting is often used by small strata corporations. It reduces the formality and makes it a little more comfortable for everybody, but it can also be used by larger strata corporations in urgency. Everybody, all the eligible voters have to waive in writing the holding of the meeting. They must consent to the proposed resolutions. If it's an AGM, they must all agree to the election of council. So this is the one time that we have the word acclamation used with respects to the election of council. It's the only time. All other times it's by majority vote or as determined in the bylaws. And it really isn't an acclamation to council. What it is everyone has to agree to what's being proposed in the waiver of notice. They also must consent to the annual budget if the meeting is an AGM. Council meeting. Here's a simple format, I think, that everybody knows. But any council member can give 7 days written notice of a meeting, and they stipulate the purpose of the meeting, not the resolutions, just the purpose of the meeting. The agenda of a council meeting is determined by council by majority vote. A hearing, obviously requested, must be held within 4 weeks after the request is given. And then at council meetings, all decisions are by majority vote. But there's no specific notice that has to be issued here. The Strata Council, under the bylaws, if they have not been amended, simply must inform the owners of a meeting at the time, date, and location. Information meetings are straightforward. They can be called at any time. There's no business convened at an information meeting. It is like a general meeting, but there is no business. And it's only for the purpose of distribution of information. Your financial statements that you have to include, this is a must for your annual general meeting. This is your notice package. You have to include a financial statement for all accounts. You have to show the current fiscal year ending amounts or the projected year end showing what the opening and closing balances are. If your AGM is before the fiscal year end, your financial reports are going to show projections. If it's after the fiscal year end, which many strata corporations do, and they wait till about 45 days after the end of the fiscal year so they can have their meeting and get their financial reports, they then provide the financial updates. A very important factor of this, though, is that the opening and closing balance for the operating budget, the contingency reserve fund, and independently for each special levy have to be shown and have to be included in the notice of annual general meeting. Whether they're projected or whether they're actual, they still have to be provided. You have to include a proposed budget and a contingency reserve contribution. This starts at a council meeting by majority vote. my own strata building. We will be having our budget meeting next week for a meeting that's going to happen after Christmas, but we will start our planning process now. You need to think about your budget planning as you move forward because it's going to be a key part of your notice package. A schedule of the fees based on unit entitlement showing the amount of each strata lot owes. This is also a requirement to the Act. And one of the items that's overlooked oftentimes is that there are amendments that come up, and then there's a new budget that has actually been approved that was not part of the original notice. It's either more or less. When this occurs, the Strata Corporation must immediately issue out a notice to the owners of those changes. If you don't do that, and there's an owner who doesn't meet those changes, those increases, or what those differences are, you will have a very difficult bylaw enforcement issue on your hands with respects to the owners. And then the last thing is you have to include the report on insurance, which is the cover page of your insurance policy. So what's included in the notice? And I think we get a lot of errors, whether you're a small or a large strata, it makes no difference, but we see a lot of errors in just basically the cover page. You need to include the date of the meeting, the time the meeting is convened, when is registration? Maybe that's an item to include, not necessary, but I would include that separately. Location of the meeting, either in person, an electronic address, or both, if both are an option for the Strata Corporation. If the meeting is electronic, include a reminder there is no provision for secret ballots. This will help to dissolve this problem before you get there, and it will help owners who are attending understand what their voting methods are going to be. Also include a date of the notice of issue. This is an important item because the date of the notice issue is going to be directly linked over to your quorum bylaws. The date of notice issue is directly linked over to the delivery period with respects to the time of notice. The order of agenda is determined in the bylaws. So look at the agenda itself under your standard bylaws. The content of resolutions or agenda items are determined by council. And then any additional resolutions proposed by council or petitioned by at least 20% of the owners. And then the exact wording of any proposed 3/4 vote, 80% vote, or unanimous vote resolutions have to be included. So when you go through the checklist, it's actually a daunting amount of information to be included. Eligible voters. I think that under your notice options, there's a few things that you need to consider. The first is eligible voters can be affected if the strata is entitled to file a lien against the strata lot. It only applies to majority and 3/4 vote, but it also requires that the strata has a bylaw permitting the action, and the strata provided at least 20 days notice of the debt and the possible lien. This is what essentially makes a person ineligible to vote. Another item to think about when you're talking about your notice options is strata corporations may require identification of eligible voters at the time of registration for specific votes. A key vote that we've really come up clearly with, because the court application that's involved, is an 80% wind-up vote. Owners as eligible voters or their proxy holders have to provide identification to verify who they are and their authority to vote at these meetings. Are we required to supply a proxy form? The proxy form or the provision of proxy is optional. It is at the discretion of each owner. There is an optional form provided in the Strata Property Act. The proxy is a delegation of voting authority for a person to act on behalf of the owner. And the Strata Corporation is permitted to include a proxy form with the notice, but the owners are not required to use the proxy form and may use any form provided it meets the requirements of Section 56 of the Act, which basically requires the name of the person, the unit strata lot number, the signature of the person authorizing the proxy, and it may be for a general proxy or for a specific purpose. Any owner can impose their own restrictions on a proxy, but not the Strata Corporation. The Strata Corporation is not permitted to impose restrictive properties and don't issue them. If you issue them and you get used, you're going to end up with enforcement issues. Here's the standard agenda for the annual general meeting, and it's standard by Law 28. Some strata corporations have made some minor little adjustments. So one thing I'd like to call your attention to in the process is there's an item that's omitted from the standard agenda, and it's the calling of the meeting to order. And it doesn't seem, we all take it for granted that we do this, and it doesn't seem that critical, but it is important to recognize the meeting has to be called to order and the time it was called to order. And the reason being is that many quorum bylaws, including the provision of the Act, have a time period from when the notice of call was given for the meeting to when it was called to order. If you don't have a quorum in that time period, then the meeting will have to either be adjourned in accordance with the bylaws, or it may be adjourned for 7 days. So when you're doing your agenda for the notice of meeting, just simply insert the call to order. If you're coming to a point where you're going to upgrade or amend your bylaws, it's an item that you can add. The agenda itself, this is the order of the agenda. This is not the business, but the order of the agenda. Your strata corporation can determine whatever additional business you wish to add. And we go through the logical sequence of what's required. Each item provides us with a little hint of the checklist that we require. Approving the minutes from the last or special general meeting, for example. Either the minutes were posted at some point for the owners to have a copy of, or you sent them out with the notice of the meeting so they could be approved at some point. Unfinished business, item G, is an item that is rarely ever used. The one occasion it's used is a budget that was not approved at the AGM, which then has to be approved at a subsequent AGM within 30 days. That's unfinished business. Reports of council and activities. Our recommendation is always, if you can do it, try to include written reports to be included with the notice. People can read it in advance, and it also helps to reduce questions and discussion at the meeting. Any new rules or amendments to rules, which really constitute new rules, have to be ratified by the owners under the Act. We have a report on insurance. We approve the budget for the coming year. We deal with new business. Now, new business is not items that people can add to the agenda at the meeting. New business is the items which notice has been given under the Act. These are going to be resolutions, such as a special levy, new bylaw amendments, and those types of things. They have to be included with the meeting notice, and the wording of them has to be included. And then we elect a council if the meeting is an annual meeting, and we finally terminate the meeting. Special general meeting, again, the agenda is determined in the bylaws. Any resolutions that you get by petition and demand a special general meeting have to be the first item on the agenda. But more importantly, when you look at this, look at the fact that we require the exact wording of any proposed 3/4, 80%, or unanimous votes. When you have a petition meeting, one of the errors we frequently have for notice of petition meetings is the petitioners will submit a demand or a petition for a meeting, but they will forget they have to write or include their resolutions that they wish. Strata Corporation is not required or even authorized to craft or write those resolutions. Your obligation is to simply reproduce what the terms of the petition are and nothing more. Notice. When we're issuing notice for an annual or special general meeting, it's 14 days notice, but the notice period under the Act also requires 4 days, plus the 2 days delivery under the Interpretation Act. So the day it was sent, the day it was received. So the total minimum notice is 20 clear days. Even if you have electronic transmissions where everyone is on email and you're going to transmit by email, always use 20 clear days of notice to ensure that your meeting itself is not challenged. The only exception to this is any annual meetings that include an 80% vote for a liquidation or a wind-up. Strata Corporation has an agreement to sell. You're going to pass an 80% vote. This increases to 28 days, plus 4 days notice and the delivery. So there's a substantially longer period of time. One of the reasons for this is because the parties who have to be notified are more extensive than just simply the owners of each strata lot. The annual budget. So it has to be distributed with the notice of the AGM. It's generally approved by a majority vote at the annual general meeting, but it may be amended by a majority vote at the annual general meeting prior to the vote. So this often raises the question, well, what if we include 2 or 3 budgets as samples and we vote on them? My experience with that has been all 3 of them get defeated, because what ends up happening is you divide your owners into individual groups and no one will come to consensus on what to approve. Your best option is you propose a budget, but you propose a budget with a clear understanding that you have the ability to amend the budget. Any line item, including the contribution to the contingency fund, may be amended by majority vote. But don't forget, as of November 1st, the contingency must always be a minimum of 10% of the annual operating budget. So here's a little glitch we need to be paying attention to now. We base the 10% on the annual operating budget for the contingency fund. We get to the AGM. We've now increased the amount of our annual budget because we've discovered that our insurance or our hydro or gas or our landscaping is going to be substantially higher. When we do this now, we're going to have to recalculate at the meeting what the annual operating budget amount is, because we will need to adjust the contingency contribution at the same time. They will be directly connected. You have to account for all the details of revenue and expense separately. So you're going to have an upper section that shows all of your revenue items on your budget, which will include obviously strata fees, and you may have some sort of rentals and locker and storage parking. There might be user fees and recovery for EV charging, a variety of different things. Your expenses will be all of your operating expenses. And then finally, your contingency reserve is separate. I'm not going into the actual sample details because we can provide you with some of those, but in the basic essence is that the notice has to include the details of these specific items. Also, a frequent omission that we're finding is that the scheduled strata fees and the contingency contributions and the method of how they're calculated are frequently not complete or included with notice packages. When you send out your notice of your AGM, the schedule of fees that each person has to pay on a monthly basis or based on your bylaws, your schedule, must be included with the notice package as well. And then obviously, if we make amendments at the annual general meeting that will change those fees, we immediately have to send out another schedule. The contingency reserve statement is also crucial. You have to account for it monthly and separately. If you're in a small strata, you don't necessarily require a separate bank account. But what you do have to account for is the value of each of the funds separately. You don't pool it with the operating fund in a reporting sense. If you can afford to have 2 separate bank accounts, that's fine. But for a small strata, it's not absolutely essential. You must show the revenue and expense details. The word details, I think, is critical and is overlooked. It's not just a line item amount. It's a line by line detail of what expenses were taken from the contingency fund. Any interest earned on the contingency fund is non-taxable, and as a result, it must be returned to the fund itself. It is not used as revenue in the operating fund. It also helps to establish the value that's posted to a Form B. Just remember that your contingency funds may be invested in basically, essentially, items under the Trustee Act that are insured by some level of government. And just a little reminder that the CRF contribution as of November 1st, so that's tomorrow, must be a minimum of 10% of the annual operating budget. Expenses from the fund. So when you're looking at your details, this is something to reflect as you're doing your report. Expenses from the fund can be for things like emergencies. They can be approved by majority vote if recommended in the most recent depreciation report. And I'm going to come to that because this is a critical issue. And approved by 3/4 vote for any other purpose and used for an insurance deductible or a policy excess cost as a common expense. Resolutions at the AGM. I think here's where we really go sideways with a lot of our reporting. Resolutions at the AGM are all generally by majority vote. If you look at Section 50 of the Act, matters are decided by a majority vote unless a different voting threshold is required. So start with the basics that we're going to decide everything collectively by majority vote. But we will also have other resolutions that may be 3/4 votes, 80%, or unanimous votes. Majority votes are for most of your agenda items. They approve the agenda, they approve previous minutes, they approve the annual budget or amendments to the annual budget. They ratify new approved rules that the Strata Council have introduced. They will approve contingency expenses recommended in the depreciation report. They approve, here's a change that occurred earlier this year, they approve the alteration or installation of an EV charging station if it is a significant change in use or appearance of common property. So this is a deviation away from all alterations requiring a 3/4 vote. Majority vote is also used for the election of council and for the termination of the meeting at the end of your agenda. So here's a question that comes up now frequently. Do we require written resolutions for majority vote agenda items? So things like the budget, the rules. The Act doesn't require exact wording of majority vote items, but there are 2 majority vote items where we strongly recommend that you confirm the Strata Corporation has clear approval. The first being ratifying of rules, and the second being the majority vote for CRF expenses. To ratify the rules, the simplest method, simply publish the newly introduced rules or amendments in the notice. And it informs the owners of the attended vote. There is no written motion that's required around this, but it is essential that the owners are aware of what they are voting on. The second part is the CRF majority expenses. These can be of a small amount or for a specific purpose, such as major construction. The depreciation report does not detail the scope of work. It doesn't detail the cost. It doesn't detail the procurement process. It doesn't talk about consulting or legal services. So when you're dealing with majority votes for depreciation report items that are recommended, the recommendation is look at what you're actually approving, because you're going to need some authority around this as a Strata Council and as a property manager, so you can spend the funds. So think about the type of things that you're going to do, but should you actually draw up a scope of work for the resolution, the amount of the expense that's been authorized up to $100,000, for example, a procurement process. Are we using a single contractor, or are we going to be going out to a bidding process for pricing? And then, of course, any additional consulting and legal services that you've authorized. The depreciation report generally does not reflect what the current costs of consultants and legal services are going to be for contract reviews. So it's important to gather all that information. I think I would look at any CRF expenses of a majority vote that are authorized by the depreciation report the same way I would look at a 3/4 vote. I would want a detailed resolution, because I would want to ensure that when we walked away from the meeting as a council member or property manager, we clearly had authority to proceed with this project. One little note I think that everybody needs to reflect on as you're preparing your notice package: just remember that majority vote agenda items can all be amended by majority vote during the meeting. It doesn't have to be anything significant or anything that materially changes the resolution. Any alteration is essentially permitted. And we've seen this also in recent years with significant increases in budgets and contingency contributions as people are planning for major repairs. 3/4 vote resolutions. When you're preparing your notice package, the exact wording of a 3/4 resolution must be included with the notice. So let's just apply that to a bylaw amendment for a second. So the first part of it is the bylaw that you're proposing. That's not the resolution. That is the bylaw amendment that's being proposed. The resolution itself is going to determine what's happening with that bylaw. Are we adopting it? Are we amending an existing bylaw? Are we repealing an existing bylaw? So it's important that you have a relationship between the bylaw and the resolution itself. Resolutions define action. Resolutions don't necessarily define content. Significant or material amendments are not permitted for three-quarters vote resolutions. You don't get to rewrite bylaws or special levies or items or significant change at your general meetings for a three-quarters vote resolution. If there is a motion for a three-quarters resolution to be amended, it's often a technical error, a misplaced comma or a period or a spelling of a word or something like that. Those can easily be dealt with. Three-quarters vote resolutions can only be amended by three-quarters vote as well. So again, look at the platform that you're dealing with voting. If you're not prepared for this, this could also be a bit complicated. Special levies, if you're doing a special levy for a three-quarters vote resolution, you have to include the schedule of fees with the due dates of the levy and the method of calculating the levy for each strata lot. Again, frequent omission is that the schedule of fees is often not included. Here's typical three-quarters vote resolutions that we would include with a notice package: bylaw amendments, designations of limited common property, anything to do with any loans, leases, covenants, or easements of the common property or three-quarters vote. Supreme Court actions by the strata corporation or arbitration are a three-quarters vote. CRF expenses that are not authorized under the previous exemptions in the Act, significant changes in use or appearance of property, common property, or the acquisition or disposal of assets over $1,000 or an amount stipulated in the bylaws. And there's some other rarely used examples, but these are the most common for most strata corporations. 80% vote resolutions is a purpose for a windup of a strata corporation. It's a pretty long journey before you get to an 80% vote with marketing and with offers and negotiations on terms and agreements for sale. When you actually get to the 80% vote, all of those conditions need to be included in the vote that is being proposed on the agenda, the exact wording of the resolution, and also to be mindful that this will require a court application to ratify the 80% vote. Our recommendation always is that you have legal services throughout the entire wind-up process, as it is quite complex for each strata corporation as they are dealing with a potential buyer, and you need legal services to negotiate on your behalf. Unanimous vote resolutions, again, require exact wording. So it's not a unanimous vote for example, to amend the schedule of unit entitlement. We frequently come across strata corporations who try to amend the schedule of unit entitlement, how we calculate our strata fees, within our bylaws. These are not bylaw items. These are unanimous votes. And a unanimous vote means all owners must vote in favor of the resolution. If anybody doesn't attend, they don't vote, it's a defeated resolution. So you require the exact wording. You require a very specific resolution. Each of these amendments also requires a certificate be filed in the land title registry, and may require the approval of the superintendent of real estate as well, depending on what you are doing here. So, again, an opportunity to take a pretty close look at the legal services you're probably going to need. So that's the basics of preparing your notice packages. Just going back to the information, we'll post it to the YouTube link when this gets posted as well. But it's guide number 400-016, and it's basically a checklist in preparing your notice packages. So Daryl, have you been surfing questions?
Oh yes, we've got some good ones. One of them talks about if the strata council delegates the strata manager to provide the notice package, does that absolve the strata council of any of the requirements or details under section 45, the notice itself? Well,
here's the simple answer. Any delegation of authority does not absolve the strata council from anything. When you delegate authority to a committee, you delegate authority to a property manager, it will all come back as you, the Strata Corporation, who has actually taken this action or made this action. So Strata Council members, you are 100% on the hook for any actions essentially that have occurred. It's one of the reasons why we name our property managers and council members on our liability insurance in our for the Strata Corporation. They are acting as our agents, and they need to be covered at exactly the same time. But if there was to be a CRT action or Supreme Court action, the Strata Corporation itself would definitely be the named party in any type of action that occurs. So, long answer, but short answer, no, you're on the hook for everything.
Great. Another question related to the notice. So I'm assuming this is bylaws included in the notice package. Do they need to be pre-approved by the council members?
Well, they have to be approved by someone. You don't just magically create them. My recommendation with bylaw amendments, and Strata corporations are getting themselves into deeper and deeper trouble writing bylaws that contravene the act. And so the recommendation is work on bylaw amendments, especially if you're working on a new bylaw package. And we're going to have a session just about bylaws. But if you're working on a bylaw package, work on it collectively. And then when you finally come up with a draft that you can live with, spend a couple hours for a lawyer to have them reviewed and get a sense of anything that should be changed or amended so we're complying with all the different micro pieces of legislation that may impact them. And then just get council to ratify them. It's an interesting thing, but the question's going to come up at meetings. And Daryl, you and I have chaired meetings probably recently where somebody said, who recommended this bylaw be on the agenda? And everybody looks at everybody and nobody really knows how it got on the agenda. Bottom line is, yes, Strata Council need to approve the agenda items, whatever they are, and the resolutions that go there. And it could be simply a matter of receiving the draft copy from the lawyers with recommendations and approving that they be included with the notice. But Strata Council should definitely see them before they go out with the notice.
Super. And then the new regulations coming in tomorrow, the 10% minimum contribution. How is that calculated?
It's calculated on the total amount of the operating expenses. So you take all of your operating expenses, hydro, insurance, whatever they all are, and if it comes up to $85,000, then your contribution this year is $8,500. So it's the total, the operating budget are all of your operating expenses, not your contingency. It does not include your contingency contribution, which I've seen that calculation a few times. It's a little weird. It says the operating budget.
Right, because I do know that often that's shown as a operating expense item line, which is your CRF contribution. So it gets confusing for sure. Is there a minimum balance anymore after tomorrow in the CRF required?
No, there is no. There never was a minimum balance. Actually, the minimum balance was actually a percentage of the annual operating budget, which triggered a mandatory minimum contribution of 10%. What's interesting is that I doubt that this 10% is going to change the budget for many strata corporations, because many strata corporations have been doing this or more, planning for work as we go forward. I think what's going to change is that smaller strata corporations who have not been contributing to their contingency funds or who have not continued to contribute when they got up to 25% of their operating, just to keep costs down, are now suddenly going to realize, hey, we're going to have to contribute every year. We don't have an option now.
Mm-hmm. Super. And then we had, let's see here, how close to depreciation report forecast year must it be to be considered a majority vote? In other words, if we had a fence replacement in the report that said 2027, but we want to do it sooner, can we still use the majority vote, or do we have to do a 3/4 vote?
So the depreciation report uses one keyword for everything: timelines, condition, amount, which is estimate. It's estimating that the work should be done in that time period. There are two schools of thought. One is that it has to be within the year that it comes due, but the problem with that is every time you do an assessment of the depreciation item within 2 or 3 years of its renewal, you discover that its life cycle is done, it's over. And you've been planning for it and you've been saving for it. So until we actually have a definitive decision in the courts or the CRT that says no, it can only be in its current fiscal year, I think everybody's used a fairly broad interpretation of that. I think if you're within a few years of the recommendation and you've done an evaluation of the asset to determine it needs to be replaced sooner, I think that would be a fine recommendation. But the other side of it is, if you've had a roof assessment done and the roofing consultant comes back and says, look, you've got 3 more years in this roof life safely without any damages, you don't need to replace it now until 2026, but the report recommended 2023, you might get your next depreciation update by that time period, but you might not. But it's still a recommended renewal. The Act itself doesn't say recommended in the year. It just simply says recommended.
Right. And just a clarification on the notice period. So how do we find the information about the 4 days and then the 2 days that are on top of the 14 days in the Act?
Well, the Act itself says 14 days. The Act itself also says 4 days, right? Okay. So the Act includes both time periods. What the clear notice, which means I must have it in my hands for 14 days, is the first part. The second part is about the period of notice. And the period of notice under the Act is 4 days. And it describes what methods of delivery can be used. And then, because this is official notice, the Interpretation Act also applies, and the Interpretation Act requires that the day of delivery and the day of receipt are added onto the notice periods. And this is how we come up with 20 days. The 20-day notice period with respects to order for sale proceedings or liens against strata lots has actually been reaffirmed within the courts.
And so that notice period in the Act, other than under Section 45, would be Section 61?
That's correct.
Okay, good. Just make sure we had that. And I'm thinking, there was one good one here Mel brought up. Can you please clarify the difference between a 3/4 vote for a strata corporation loan versus a temporary CRF loan for the operating cash flow shortage that does not require the vote for owners?
Okay, so a loan of the corporation means that the strata corporation is going to be going to a financial institution or adopt a credit card or credit services somewhere or a lease on some product or material or something. Those types of loans require a 3/4 vote. They don't fall into the CRF category. A shortfall, the Act prescribes the shortfall. If there's a shortfall in the operating, you obviously need to pay your bills. Usually this happens when the insurance is due. Insurance is due long before we've collected all the strata fees for the year. We can use our contingency funds to pay for the insurance amount, and we can use that as a loan from the contingency fund to the operating fund, and that's a simple decision of Strata Council, but the Strata Council must report that to the owners in the minutes.
And it must be paid back for the end of the
fiscal year. Has to be paid back within the same fiscal year.
Exactly. Which can be done because you've already budgeted, but you've got a shortfall in the operating, right? So I think that's where people are mixing this up. Okay. Yeah. Super. I think that's about it.
Super. Great. Thank you. And thank you everyone for joining. As previously said, these are pilots to determine what type of content, material. There are going to be a number of these sessions, essentially to get strata corporations to understand what the basics are and where most of the errors are occurring within the communities. And hopefully these sessions will get structured into a series of online active courses you'll be able